Bit of a novelty here with a rundown of 3 AIM stocks in video form. The first one is Gulf Keystone, where there seems to have been a buy trigger on a technical basis. You saw here in January there was a one-day bear trap below the November support line, and that led to a push to the upside of about 40 pence, 45 pence, up to the top of the channel at £2.25. It looks as though we've got the same one-day bear trap below the November support line at £1.85, and really what you could say now is that as long as 185 holds, we're looking for a similar surge towards the top of the November channel, which is currently around £2.35, nearly £2.40. Obviously, there's at the moment doesn't seem to be any rush to get in, but a break of £2, which is the area of the 50-day moving average and the 200-day moving average, would probably be enough to get things moving quite sharply. RSI currently in neutral, so again underlining the way there's no need to rush in, but there's already been 10 pence of upside, and presumably if you don't want to miss out, or you would actually get involved on any weakness at the moment, such as we saw on Friday. Moving on to Xcite Energy, another very encouraging situation here. I think I wrote up the stock right at the end of February the 28th, I think, and lo and behold, the next day the shares were up 10%, which was very pleasing. The reason for the bullish call then was the way that we were just seeing the 50-day and 200-day moving averages starting to rise after, especially the 200-day line. And the 200-day line, when it starts going from flat to positive, as it has over the past couple of weeks, is the time when a stock can be at its most bullish. So on that basis, I would be looking for further sharp moves to the upside here from next week. The favoured target here is the upper parallel of the support line shown from December. That's heading for £1.40. The good news at the moment is the way that the stock is consolidating at or just around the initial January £1.10 resistance. The longer it does that, the more we can say that we should see an explosive move out of the bull flag that's currently being formed. And normally, a bull flag above, at or above previous resistance is a very strong sign, and this together with the other positive aspects at Xcite make it one of the buys for the month. To complete the trio, we've got Range Resources. Here, I called the stock higher last month. I was rather scared, obviously, because of the sort of the false storms that we've had all the way down, especially in January with the failure at 4 pence. So therefore, the message last month was wait until 4 pence is broken before going long. And if you've done so, even if you bought 4.1, 4.2, 4.25 pence, there was still plenty of upside, plenty of chance to get in and get the initial advantage of the initial move towards 6 pence. The current position is we've got a mid-move consolidation either side of the 200-day moving average, the black line, which is just below 5 pence. The second half of last week saw the price action, even on the lows of the day, well above the 200-day line. This implies that the shares are ready to take off again, hopefully in the next few days, and certainly by the end of next week. And really the target at that point, above 5 pence, we're looking to head back towards 8 pence, which was a resistance area earlier in 2012, earlier last year. So very encouraging U-shaped reversal there at Range Resources, and at this stage only back below 4.5 pence would really delay the upside scenario.